Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COSCO Ship Hold interim report. COSCO Shipping Holdings Co., Limited, offers a diverse range of businesses and services, including maritime container transportation, services logistics service digital supply, chain service terminal business operations, through its terminal business segment, other businesses, including unspecified but related activities. The company operates a large fleet of 528 ships with a total capacity of approximately 3.28 million TEUs, serving various regions including the United States, Europe, Asia-Pacific, mainland China, and internationally. The recent surge in COSCO Ship Hold stock price can be attributed to several positive financial developments. The company reported strong 2024 financial results, with revenue growing by 33.29% and earnings increasing by a staggering 105.78%. This robust performance was driven by the growth of its container shipping business, which saw a 7.5% increase in revenue. Additionally, the company's terminal business revenue rose by 14.8%, further contributing to its financial success. The high dividend yield of 10.06% in 2024 also attracted income-focused investors, providing an additional boost to the stock price. Furthermore, the company's continued profit growth in HON 2025, with revenues up 7.8% and profits rising nearly 4%, maintained investor confidence in the company. However, it is essential to note that recent news has highlighted negative pressures on the stock, including a new U.S. port fee policy targeting Chinese vessel operators and technical indicators suggesting potential downward pressure. Despite these challenges, the positive financial developments in 2024 and HON 2025 have contributed significantly to the stock's increase in value over the past year. The primary drivers of revenue growth for COSCO Shipping are primarily attributed to its container shipping business and terminal operations. Within the container shipping segment, significant revenue growth was observed in various regions, including Asia, mainland China, and other international routes. The company's terminal business also experienced a notable increase in revenue, driven by higher volumes handled. In terms of specific numbers, the container shipping business saw a 6.59% increase in revenue, with notable growth in trans-Pacific routes, 2.13%, Asia region, including Australia routes, 13.82%, and other international regions, 18.79%. The terminal business also reported a 6.35% increase in revenue. The supply chain revenue segment, which includes non-shipping fee income, saw an increase of RM$0.666 billion at the group level and RM$0.648 billion at the COSCO Shipping Line's subsidiary level. Overall, these drivers contributed to a significant increase in revenue for the company. The company's financial performance indicates a positive trend in its operating cash flow. The net cash generated from operating activities has consistently increased over the years, with RM$25,776,977 reported for 2025 compared to RM$22,654,387 in 2024. This growth suggests that the company is efficiently managing its operations and generating sufficient cash to support its business activities. The company's debt level and interest expenses have undergone significant changes from 2024 to 2025. While total liabilities increased by 1.5%, long-term borrowings actually decreased by RM$551,041. However, short-term borrowings saw a notable increase of RM$699,291. In terms of interest expenses, the company has experienced a substantial decrease of approximately 19.6% from 2024 to 2025. This decline is evident in various metrics, including net interest expenses, down by 18.7%, interest paid RM$832,351 versus RM$1,022,865, and interest expense on loans from third parties decreased by RM$189,939. The company's financial performance varied across different segments and regions. The container shipping business stood out as a strong performer, with total revenues of RM$104.8 million and segment operating profit of RM$18.7 million on page 55, and RM$97.5 million and RM$18.3 million on page 56. In contrast, the terminal business struggled, recording a segment operating loss of RMB 73,916 on page 56. The corporate and other operations also showed limited growth, with total revenues of RMB 5.1 million on page 56. Overall, the company's performance was mixed, with some segments showing significant growth while others lagged behind. Management's outlook, a focus on sustainability and growth management, is optimistic about the company's prospects, with a clear focus on sustainability and growth. They plan to continue utilizing cash for essential purposes such as operating costs and strategic investments in container vessels. When it comes to financing arrangements, management will carefully consider factors like debt repayment, loan replacement, and future capital expenditures. This approach reflects their commitment to maintaining high standards of corporate governance, ensuring the company remains financially stable and poised for long-term success. Overall, management's strategy is centered on prudent financial management and strategic investments that drive growth while upholding strong governance practices. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out interim cash dividends in August 2024 and 2025, totaling RMB 0.56 per share and RMB 0.52 per share respectively. Additionally, the company has also engaged in share buyback activities, repurchasing a total of 472,378,049 shares as at June 30, 2025. Concerns about inventory buildup and supply chain disruption exist. The financial summary highlights potential issues with inventory buildup and supply chain disruption. On pages 21 and 22, revenue from container shipping business and supply chain revenue increased, but this growth was accompanied by a decrease in EBIT margin on page 21. This suggests inefficiencies or disruptions in the supply chain may be occurring. Additionally, cargo and transshipment expenses, equipment and repositioning costs, and port charges all rose on page 75. These increases indicate that the company is facing challenges in managing its inventory and supply chain operations. That concludes the financial summary for COSCO Ship Hold. Feel free to comment below, and I will be happy to answer them when possible.